Hi guys. So one of the most common questions that I've been asked is to make a video on situational awareness. A lot of people seem to be struggling with this, and this was definitely the case with me when I started trading as well. I had no sense of what situational awareness was, how to think about it, or how to practice it in my day-to-day routine. And since I have learned this to some extent and have been implementing this in my trading, it's definitely been a game changer for me. So in this video, what I'm going to do is talk about situational awareness, but more particularly how I practice it. And there's a lot of different ways that different traders do it, and they use different terms to talk about it. Sorry about that. So Minavini has one as well where he has the red, orange, green signal that he talks about every week. Or Leif Soraidi in his group talks about the market condition and then uses a green dot, yellow dot, red dot. And situational awareness is the term that StockP uses, and they use a traffic light signal of green, yellow, and red. So I think the idea, the broad underlying idea that everyone is using is the same. Even if you check IBD, they have a section called market condition, and then they'll talk about market and confirmed uptrend or downtrend and so on. There's just a lot of different terms to refer to the same idea. And a lot of people practice it, but do it slightly differently. But in my understanding, in my experience, the results that they come to are the same. The conclusions that they arrive at are the same. And in this video, what I'm going to do is really simplify it down to the bare bones and talk about how I use it in a very, very, very simplified way. So this may not be exactly how Minavini uses it or StockP uses it or IBT uses it, but this is how I use it, and this is customized to my trading strategy and setup. But I hope that some of the explanation helps clear a lot of the confusion about this for you. So what is the meaning of situational awareness? It's a very complex sounding term that's simply trying to answer the question that what are the odds of breakouts working right now? That's all you're trying to gauge by practicing situational awareness. So are the odds of breakouts working right now, today, really high, or are they really low? Or are they somewhere in between? That's essentially what you're trying to answer. And why is this question important? Because this is going to determine what is your trading plan for tomorrow and whether you're going to play offense or defense. And I'm going to describe exactly what I mean by offense and defense and how I practice it. So that's all that situational awareness is, or market condition, whatever you want to call it. You're just trying to assess the odds of breakouts working right now. And I refer to breakouts because that's the strategy that I trade. If you're a short seller or something else, then you just replace breakouts with your strategy. Once you know what the odds are, then you can create your plan for the next day. Okay, so the main thing you need to know is what is the benefit of using SA. And let me just tell you, I did not understand this and did not use it for the first 8 years of my trading. And without using SA, this is what my equity curve looked like. It was wild and choppy, and the pullbacks in my equity curve were almost, half of the upswings. So say I would make $10,000, I would give back 5,000, make another 10,000, give back 5,000. It was wild. But once I started understanding this and implementing it, the equity curve became a lot smoother. So my pullbacks now would only be around 20% or 25% compared to 50%. This is obviously going to make your trading a lot more profitable, but more importantly, it's also going to give you a lot of peace of mind. It's really not good for your head and your heart to have an equity curve that's going through such wild swings. Trading and life will become a lot more peaceful and linear once you implement the SA and smoothen out your own equity curve. Okay, so the main thing I want you to take away from this video is to keep it super simple. Now, there are a million different ways that traders get the same conclusions about their situational awareness. So whether you use your watch list or you use the market breadth monitor or you use the indices charts or you do a 20% mover study or you're looking at your own equity curve or you're looking at some sort of indicator like percentage of stocks above the 20 MA or 50 MA or 200 MA or inbuilt indicators like T2108 on TC2000, etc., etc., etc. All of these, if you're using them and interpreting them correctly, are going to give you the same conclusions. So you can make your life very complicated by looking at the market condition from 50 different angles and creating an entire PhD thesis on your situational awareness every day and looking at all of these different things. But as you know, I like to keep things super simple. And so what I have done is to pick the 2 or 3 that make most sense to me and are most relevant to my strategy. And say you've picked any 3 of these that you understand best and find most reliable to your style of trading, you're going to end up with the same data as if you used all of these. So try to keep it simple and don't get lost in the weeds. If someone else is using your market breadth monitor or some guru is telling you you must use one particular indicator, there is no holy grail. Don't get FOMO and try to add everything into your analysis. Keep it as simple as possible. You're going to get more reliable conclusions out of it than to add everything into your analysis. Okay, so what are the 2 or 3 things that I use every day? Now, for me, my number 1 gauge of the market condition is my watch list. Specifically, I ask 3 questions. How long is my watch list? What percentage of my watch list is green? And is there large R wall? So are the stocks on my watch list breaking out on large R wall? The second thing that I use to analyze the market condition is my own portfolio. So I just take a look at my last 10 to 20 trades and ask, these breakouts that I bought, did they actually have follow through for the last 3 to 5 days after I bought them? And the last thing that I look at is the general market or the indices. In my case, specifically, I like looking at the SPY, the QQQ, the IWM, or the Dow, the 4 main indices. So I simply ask, are these indices in a range, like a sideways range? Are they in an uptrend? So range would be something like this. Are they in an uptrend or are they in a downtrend? Okay, so I'll get rid of this. Yeah. Is there news upcoming? So is there an FOMC that's coming up? Is there an election coming up? Is there earnings season coming up? And I always want to keep note of that Because if that is coming up the next day or within the next 2-3 days, that is going to affect how I trade stocks, and I'll discuss exactly how. And I also like to make a note of which sectors are leading and lagging in any given environment. So if we look at the sectors right now, then the biotechs have clearly been leading the charge, and the regional banks or the KRA have been the biggest losers recently in the last few months. And are there any bubbles or forming in any hot groups? So these will vary from time to time. And if you are trading full time or very actively, then you'll have a sense of this. So currently there's a bubble in AI that's brewing, and previously we've had bubbles in stocks that are heavily shorted, or crypto stocks, or oil stocks, uh, occasionally metal stocks, etc., etc. So these are the only things that I look at to determine my situational awareness. And the reason that I pick these are because they are simple, they make sense to me, and they're relevant to my trading strategy. So once I've analyzed these three things, it answers the question of what are the odds of breakouts working tomorrow? And that helps me make a plan for how I'm going to trade the next day. Now, very simply put, I have two different tactics, and I try to determine whether I'm going to play defense the next day or offense the next day. So, Minovini has a way of describing these two as chicken or pig. And when he goes into defense mode, he says, you got to be a chicken, play as small and scared as possible. So be as less aggressive as possible. And when he wants to play offense, he says, I'm going to become a pig and I'm going to buy into breakouts as aggressively as possible with as big a size that I can put on as possible. Now, another analogy that you can use if you're more inclined towards sports is thinking of playing defense as taking singles or dot balls, and playing offense as hitting 4s and 6s or boundaries. And these are cricket analogies. You can use the same idea if you're into baseball, or home runs in this case, right? So even if you think of yourself as a sportsman, you always go into a pitch thinking, what am I going to play defense right now? Am I just going to defend the ball and take a few singles here and there? Or is this the best time for me to take home runs or hit 4s and 6s? Right? So that is all I'm trying to determine for the next day, very simply. Now, what do they exactly mean? Defense means I'm going to play small size. Offense means I'm going to play big size. And check out the video on position sizing if you want to know what this exactly means in terms of quantifiable numbers. I lay that out there very clearly. And defense means I'm going to trade fewer breakouts, so maybe just one instead of two. And offense means I'm going to come into the day knowing that I'm going to trade 2 breakouts at a time, keep moving the stop up, and then taking 2 more breakouts, and as many as I can. I'm coming into the day with this mindset, essentially. Now, if my plan is to play defense, then I'm usually going to wait 15 to 30 minutes or more to see if these breakouts are holding or not. I'm not going to come into the day guns blazing, ready to pile into stocks in the first minute or the first 5 minutes. But if my plan is to be is to go full offensive or full aggressive, then I'm going to come into the day wanting to enter stocks in the first 5 minutes or even the first 1 minute of the day, because I know that the odds of breakouts working are very, very high. And that's essentially the reason why I'm doing all this, right? I'm going to wait 15 to 30 minutes because my situational awareness has told me that the odds of breakouts working are very, very low. So I want to wait and see, do they even hold? And in this case, I have clearly determined from the three things that I analyzed before that the odds of them breaking are very high. So I enter guns blazing immediately as soon as the market bell rings. Now, in terms of selling tactics, if I'm coming in with a defensive situational awareness, then I only want to do swing trades. So I'm going to sell into strength, book some at 2 hour, book some at 3 to 5 days, move the stop up very aggressively just to protect my stock. And if I've come into the day knowing that I want to play offense, that the odds of breakouts working are very high, then I would take position trades. I would be more patient with the stocks, move the stop up much slower because I know that the odds are in my favor and this breakout is going to work out, and hold the position as long as I can. Try to give it as much time as I can to make the biggest move that it can. Okay. Now, let me show you an example. So, what would a defensive situational awareness look like? So usually if I'm playing defense, it's because I have a very small watch list. So just 5 to 10 names that I could find that I've set up for the next day. Very few names in that watch list are green once the market opens. Most of them are just red or chopping around. There is very low relative volume. So even the stocks that are breaking out from my watch list have such low relative volume. They are breaking out in such low volume that there is no conviction behind them. And the odds of them actually working are very low. My portfolio has no traction, which means that my equity curve is probably just going sideways instead of going up. So that would be another sign. Breakouts would be failing in 1 to 2 days or the same day. So if I take a look at my past 10 trades or my past 20 trades, I would see that I would buy a breakout and then the next day it fails and stops me out. And none of them would have followed through for even 3 to 5 days. And indices in this situation generally would either be in a downtrend or a sideways trend. Generally, this also coincides with being in a news-driven market. So when there's a lot of economic or political instability and the market is just moving based on headlines from one day to the next. Now, what does an offensive environment look like? What is an aggressive situational awareness look like? Usually, if I have a long watch list and I'm even struggling to bring it down to just 20 names, that is a sign that you want to go more aggressive. Most names in your watch list the next day are going to be green, like 15 out of 20 would be green. And the volumes on all of those breakouts would also be really high. This is really important to me because if the volume is high, that means it's not just me who's buying the breakouts, but institutions are piling into these stocks. And they're really buying with a lot of conviction. And if institutions are buying, that means they're going to continue buying for 3 to 5 days at least. And they're not going to sell anytime soon. My equity curve would be making new highs in this situation. And that itself would be a sign that I want to get more offensive. The breakouts would be rallying for 3 to 5 days and more. Indices would be in an uptrend. And there would be several sectors that are very strong. So in the current environment, for example, you only have the biotechs that are really strong, not anything else. But in a market environment where the situational awareness is very bullish, you would usually have at least 5 to 10 sectors that are doing really, really well, and a huge number of stocks that are in uptrends. So let me show you an example of how I actually practice this. And this is just taken from my Twitter, from the recent ones that I post. So my trading plan for the day is something that I post every single day. And this is an example of what it usually looks like when the situational awareness is bearish. So let's see this one. Trading plan for today. Bearish action across the board. SPY and Dow broke their recent range to the downside. So that means they were in a range and then finally broke to the downside. Many stocks broke down in my universe of earnings winners. And if you don't know what that means, to check out the video on how I create my universe of earnings winners and what the logic behind that is. So the same action is probably what I observed on that day in the earnings winners universe. So I write in my trading plan for the day, I will be extremely defensive. And I need to see big breadth and volume before buying breakouts. So big breadth, as in a lot of stocks on my watch list going up on big volume before I buy breakouts. So this is all that there is to your situational awareness. It doesn't need to be bigger than this or more complicated than this. All I have done is look at the indices. I have looked at my watch list. I have determined that the odds of breakouts working tomorrow is very, very low. So I want to play defense. And then I've described what it would take for me to change that defensive mode into an offensive mode, which is big breadth on my watch list with volume. Simple, logical, short, and very actionable. Now, let's take a look at another example. So, trading plan for today. Indices reacted very negatively to Jay Powell's hawkishness. So that's bearish. Jay Powell, if you don't know, is the Fed chair of the US and probably the most influential man when it comes to the markets. And I believe he may have had a speech or an FOMC this day. And when the indices reacted negatively, that told me that I should be bearish or defensive. No follow through in either direction. So what I'm looking at in this case is just my last 10 to 20 trades. I went and took a look at them and saw that there was no follow through in the longs, the shorts. The longs could not keep going up for 2 to 3 days. The shorts could not keep going down for 2 to 3 days. It was just chopping around. And so was my equity curve. So it's a hard penny environment. This is another analogy that you can use to understand defensive versus offensive. So Minervini just calls it hard penny environment versus easy dollar environment. And in this case, I'm just quoting him or using his analogies. So he would say, it's a hard penny environment and be a chicken. Basically, that means I'm going to play defense. Focus on EPs and SIPs. Now, this is another nuance. Even when the market condition overall is very bearish and you're playing offense or defense, if there is an EP, which is an episodic pivot, or a stock in play on that day, that has the power to buck the general market trend and make a one-day move. And a trade can be made with that setup. So if once you've become a little bit more experienced with trading, this is something that you can add on to your arsenal. So you have something to do in bearish market environments. And I have done a video on how I search for EPs and SIPs every day. So you can check that out if you want to know more about this. Then I'm also talking about what size positions I'm going to take today. So I've already planned that I'm going to take only pilot size positions risk 0.1% of my total equity. And if this is confusing to you, then check out the position sizing video. I go through that in detail. And I've listed my open positions, and you can see how few there are. In a bullish market environment, where I'm trying to get aggressive and play offense, I would usually have 5 to 10 to 15 positions that are open. But in this case, it's very few. And this one, I remember Miniso is something that I had on since November of last year. So it was just a position trade that I've been working for a really, really long time. And the SPY was in my 401k. So essentially, all I had was one open position. Recently, that had still worked. Okay. Now let's take a look at what the flip side would look like. If I'm aggressive on a particular day or coming in with an offensive plan, what does that look like? So in this case, I say market plan. Market is bullish. Why do I say that? I was looking at the indices. The triple Qs were at a 7-month high. So that clearly means they were in an uptrend, and that made me bullish. I was looking at what groups were leading. And at this point, which is March 30th, semis were the strongest group. So this also helps me figure out where the dollars are flowing and which kind of stocks, if they break out, have an even higher odds of moving. Then I note there was good breadth across the tech sector and the growth stocks. So all of these three are me looking at the market, the indices. Hold on, where did my mouse go? Yeah. All of these are me just looking at, what did I do? Okay, are looking at the market, the indices, the groups, and seeing where the money is flowing and whether they're in uptrends. Now, I also mentioned, remember, one of the other things that I look at is my own portfolio and the traction that it's gaining. So I said that I took 4 swings yesterday and 3 of them worked. So my portfolio is gaining traction. If I took 4 swings yesterday and 3 worked, that probably means my equity curve is moving up. So that was another check mark. Once I did this analysis, I then think of, okay, what's my plan for today? So my plan is to be offensive, to play aggressively. So I raised my position size to 25 bips today. So if you remember, when I was playing ultra defensive, I was playing at 0.1% road, that's 10 bips. And I raised my size here to 25. And I note my top watches for the day. Okay. So you want to make it actionable and simple. In all cases, I'm looking at the same 3 things, analyzing the same 3 things, the market, my watch list, and my portfolio, and then determining, am I going to play defense or am I going to play offense, and what my position sizes will be, where I'm going to sell, and what it would take for me to change my defensive stand into an offensive stand or vice versa. Okay, last example. I say trading plan for tomorrow. Indices closed strong and BTFT showed up midday. So that's bullish. If you don't know what BTFT is, definitely Google it. This is a term that you're going to hear a lot if you are in the US markets. Now, I say despite oil shooting up, tech held up very well. So WIX continues to bleed. These 3 are just points from my general market analysis. All of these 3 are extremely bullish. When the WIX goes down, the market goes up, usually, and vice versa. And then I write, how is this going to affect my plan for tomorrow? I'm going to continue to be offensive and trade 25 pips positions. and I go on and on. So hopefully this makes sense now. It's a very, very, very simple process. You're looking at the same three things, which is the market, your portfolio, and your watch list. Then you are determining, am I going to play offense or defense? And then that determines your position size and your sell rules and your buy rules. Simple. It's a very, very, very simplified and logical process that I have created for myself based on my trading strategy. Okay, I'm going to clear all of this now, turn this off, go on to the next slide. So, in conclusion, you want to keep things super simple. Do not get scared of this complex term called situational awareness or try to fit in 50 different things to figure out what your trading plan for the next day is going to be. Keep it simple. Use what makes sense to you and what makes sense to your strategy. Most importantly, understand the logic behind it. This is not something that you can memorize. This is a skill that you need to learn. And the only way to learn this is if you understand the logic behind it. If you don't understand the logic behind it, you're always going to look to someone else to tell you what their essay is, what their situational awareness or plan for tomorrow or market condition reading is. You're going to run to Minervini, you're going to run to IBD, you're going to run to Stockbee, you're going to run to Leif, you're going to run to every other market guru that you can find and try to, or even read my Twitter plans for the next day. That is not going to help you in the long run. You want to understand what the logic behind us doing this is. Once you understand that and you create your own really simple framework for how to analyze the market and how to create your trading plan for the next day, you will not need to depend on anyone else and your trading will improve leaps and bounds. So please let me know if this was helpful in the comments below. And if there is anything that I was not clear about or you would like more clarification on, to let me know that as well. The same framework for using SA can be applied to any market in the world. So if you're trading a different market other than the US, use the logic and the framework to apply it to your own market. And if you're trading a different style other than me and different setups, again, customize your SA framework to your setup. Just understand the process and then customize it to yourself. Let me know if there's anything else I can help with, but I hope this has been helpful, giving you a little bit more clarity on this seemingly confusing topic. It took me about a year of practicing this as well to get good at it and to use my own framework, to come up with my own framework that would be relevant to my trading. So give yourself some time. It's not a skill that you're going to pick up in one day, but you will over a period of a few months or a year if you stick with it. And thank you so much for watching this.